If you've now joined me in welcoming Jay Taylor. Jay is a hard money guy. Jay's website is moneystocks.com. Jay, how you doing today?
I'm doing really well.
Jay, it's always a pleasure to have you on, and I enjoy talking to like-minded individuals. I know you've been following this sequester, these so-called spending cuts, and the next issue that they're going to be facing is the debt ceiling. I'm sure they're going to raise it for the 103rd time or 102nd time, whatever it is. We've got Ben Bernanke fully monetizing the U.S. debt now. We have inflation, so they're going to redefine inflation with this chain-weighted CPIU. What in the world is going to become of our currency?
Well, I worry that we're as David Stockman said, we are in the process of destroying capitalism from the inside out, and they're destroying the capital markets, and in the process also, I think, destroying the currency. I mean, how can you create endless amounts of the currency of anything, and it remains and it retains its value? It cannot. So, an endless amount of new money creation is going to debase the currency. It's going to mean that it will buy less and less, which means that tangible assets will rise as counted in that currency.
Jay, do you think that we are on the verge of seeing some very significant inflation?
I'm afraid we are. I put something together called my inflation-deflation watch, and it's non-back-tested, really not a scientific measure necessarily, but it includes what I consider to be some of the most important sort of sectors of the global economy, and it looks to me as if we're on the verge of an accelerated growth or an exponential growth, and it's really started to take off fairly significantly since QE Infinite started to go into effect on January 1st of this year. There was talk about it, and that helped to sort of bolster the markets, the equity markets, for a bit. And then it started, nothing was really picking up very well. The economy wasn't doing very well. Nothing was going very well. And people started getting a little bit leery of it. And also we had, Federal Reserve people talking about how maybe we're going to have to think about ending QE at one point. And all that sort of gave the market a bunch of jitters. But in fact, I think what it really did was serve, but what we're seeing now, though, in the meantime, is an acceleration of commodity prices, stock prices, of course, hitting new highs. And it looks to me as if we could be on to something very serious here in terms of price rises in asset prices I'm talking about. Certainly isn't driven, unfortunately, it's not driven by a strong economy. That's what bothers me most. It's more money sloshing around, available to speculators, people with money, access to the banking system that are now playing games with that money and enriching themselves, driving prices up and impoverishing even more of the middle class.
Jay, what do you think Bernanke's goal is? I mean, clearly it's not a stable currency. And I know he's targeted the ending of QE3, which was, if you count all of his other deals, is probably the fourth or fifth rendition of this money printing. But he's ostensibly paired it up with the unemployment rate, which he has no control over. What do you think he's really up to?
I believe that, and I don't know for sure what his intentions are, his conscious intentions. Who would know, about that? But it seems to me clear that the Federal Reserve has been an absolute failure in doing what they say their mandate is to do, that is to maintain stable prices and the full economy. Full employment economy. So they've been an abject failure ever since their creation. They destroyed the currency. It's worth, something like 3 cents on the dollar compared to when the Fed went into practice and went into being in 1913. But as David Stockman said here in New York a few weeks back, this guy is the worst chairman we've ever had in terms of the stabilized monetary system. And because he's creating so much more money than anybody else did, just creating it out of thin air and redistributing wealth. What I think really is the goal of the Federal Reserve, and this chairman would be no exception, or else he wouldn't be the chairman, is to protect the shareholders of the Federal Reserve, which are the large international banking interests. So that's what I think is really. I mean, that's why these big guys get bailed out. That's why we've gotten rid of free market capitalism completely. Is to protect the rich and the powerful. And I think, honestly, if you look at the definition of fascist economics, this is fascist economics that we've got in place now. And I mean, it's sad because it's destroying the country. In the meantime, though, people are buying the idea that Mr. Obama and Bernanke are here to help us, and they're, and so I think that there's more and more unemployment, and the unemployment rates are much worse than what we're told they are, too, by the way. I'm convinced of that. I mean, John Williams, an economist I expect to have on my own radio show perhaps next week, talks about inflation and unemployment, and if you look at those two, I like to say those are the two canaries in the coal mine that are really telling us that we're in big trouble. Because if you take the inflation rate and then adjust growth accordingly, we've never bounced off the bottom yet. We are still very, very, this is still a depression. And unemployment rate, if you count it the same way we did in the 1930s, we'd be looking at something, north of 20%. So the games are being played by the policymakers, and the news media continues to repeat it over and over again. So the more we hear it, the more we believe it, and it must be true if these smart people with Ivy League degrees behind their names are telling us so. And so I think, but in answer to your question, I think Bernanke is protecting the banks. I think that's what he's there for. That's what the Federal Reserve was created for. Of course, they couldn't tell the public that, because if they did, people wouldn't go for it, in a democratic system. But now, the whole thing is keeping people dependent and keeping them dependent on government. And that's what all good dictatorships do.
I tell you, it's amazing how much we see things from the same perspective. And yes, the Federal Reserve, and most of my listeners know this, is a privately owned banking cartel. Mm-hmm. And Ben Bernanke is a representative of the banks. And that's why all their actions are always aimed at the banks. And
right.
To the extent that the general good of the economy and the rest of us, our interest coincides with that of the banks, great. If not, he's going to go with the banks, and that's what they're doing right now. And the reason they're able to maintain this system is so that the politicians can tax us with this inflation tax, and then they'll be blaming somebody else when we're paying $10 a gallon for gasoline.
Right, exactly. And the symbiotic relationship between the politicians and the bankers are clear. If you have a fiat currency system instead of an honest monetary system that rewards those that work hard and save their money, and then instead the one we have rewards those that have control over the system. So the Federal Reserve system that can create money out of nothing is in a position to finance unlimited growth of government. So, all this talk of sequester and all the squealing and hollering, which is just a bunch of baloney, because the amount of, it's actually not even cutting anything, as I understand it. At best, it's staying where we are. It's cutting the growth of government. And so it's all just a bunch of, and so what, the government, the Obama administration wants to do is to scare us into thinking, oh my goodness, you're going to have to wait you're going to have to wait twice as long at the airports to get in, go through TSA. Life is just going to be impossible if you cut any government spending at all. And in fact, what of course that is doing is redistributing wealth and also capital, more importantly, taking capital from productive means and putting it into government, which is service jobs, which doesn't create wealth. So it is a recipe for disaster long term. And, what we have to do, though, in the meantime is try to protect our families and our own wealth as best we can. But I think it's, you need to be wise about what's going on and not drink the Kool-Aid, as they say, that is given to us by the policymakers.
We're speaking with Jay Taylor. You can get more from Jay by going to miningstocks.com. Jay, it's always a pleasure, guy.
Always good to be with you.
All right. Talk to you later.
Thank you. Take care.